Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, May 22nd, 2023. Welcome back to the podcast, Sekido-san.
Good to be back.
Good to have you. So as you know, Japanese Prime Minister Kishida hosted the G7 summit this past weekend in Hiroshima. Why don't we open the episode by taking our listeners through some of the implications of that summit, as well as specifically as it pertains to domestic Japan, as well as some of the other recent developments in Japanese financial markets.
The G7 summit in Hiroshima on May 19th to 21st closed with the release of the Hiroshima Vision Declaration. Japanese Prime Minister Fumio Kishida's popularity rate will be closely watched in the coming few weeks. On May 21st, he rejected the possibility of dissolving the lower house and calling for early general elections, saying that his highest priority will be achieving the results on important policy issues. However, the Prime Minister has the exclusive authority to dissolve the House, and the ruling party's election strategy team's prognostications for votes holds one key to what will happen. Media speculation about the dissolution will likely build ahead of the end of the current diet session on June 21st. Two more recent developments over the last weekend were, firstly, Japan's April nationwide core CPI figure at 3.4% year-over-year released on May 19th, taking up further from 33.1% year-over-year in March. And the BOJ Governor Kazuo Ueda noted the risks regarding the debt ceiling in the U.S. in remarks to the lower house, commenting that he intends to stick with monetary easing. While the yen has rose and the Nikkei has surged, breaking above the 30,000 mark, the 10-year JGBs has moved only slightly, currently standing at around 0.39%. On a Japanese investors' demand for the long-duration assets, 10-year yen basis has tightened to 85 basis points, possibly because of the falling as JGB arbitrage trading.
Okay, just a couple things you mentioned. The move in the Nikkei is just absolutely incredible. So you have it trading at levels. I guess we haven't seen since, is it 1989? Is that correct, Sekido-san?
Right, that's correct.
Yeah, and then also core inflation in Japan in general, but core inflation, if I'm not mistaken, I think is at the highest level since the early 90s as well. So a lot of really interesting things happening in Japan. But as you mentioned, that's not universal. 10-year JGB yield sort of stuck in the mud as is basis. But I think any podcast on Japanese financial markets would be remiss without spending a little time on the BOJ. What are you expecting from Governor Ueda in the near term?
Mm-hmm. The market speculation about the policy change by the BOJ has been somewhat muted as of late. In our view, the BOJ's policy stance depends on both inflation and the stability of the financial system. We'll be watching to see if there is a pickup in the inflation rate and the sustainability of the price pass-throughs, as well as to see if fears about the risks surrounding the debt ceiling in the U.S. prove founded. Dollar market tightness at the end of the first half is overcome, and the stability of the global financial system is once again reaffirmed. If these play out, then whereas BOJ will be in a good position to take the next step on policy and remove yield curve control limits as soon as July. This, of course, also depends on Kishida administration's policy decision.
Okay, so again, not imminently, but still on the watch to see if the BOJ eliminates yield curve control, potentially as soon as the third quarter. Okay, so switching topics, as you know, perhaps better than anyone, the JSDA, Japan Securities Dealers Association, recently released its April investor data. This isn't a series that I in particular track closely, but I do know it can be very helpful in sort of diagnosing, changes and moves in the JGB market. Why don't you take our listeners through the key implications from that release?
According to the JSDA, Japanese Securities Dealers Association data, the foreigners net bought the JGBs by 25 trillion yen in April. This was largely the function of net buying the TDBs by 23.4 trillion yen. The Japanese major banks and lifers net unloaded JGBs across all durations, while Japanese regional banks and overseas investors were, in contrast, net buyers at the start of the fiscal year 23. Japanese investors diversified trading of JGBs by sector throughout in April. JSDA data showed that the foreigners, agriculture forestry institutions, and regional banks were net buyers of super long JGBs. Heavy foreign buying in particular flattened the long end of JGB yield curve. Whether preference for super long JGBs will persist among city banks and lifer segments will be closely watched. We think Japanese city banks and lifers may turn net buyer in May to June after unloading JGBs in April, so that we maintain our view of yen rates with a downward bias. In April to May, the foreigners, Japan stocks, and JGB flows were strong, but Japanese investors also reviewed their foreign bond portfolios, and yen basis maintained a neutral bias.
Okay, so plenty of action in the JGB market. I guess despite sort of lackluster price action as we previously highlighted. Why don't we close things out with your outlook across spot dollar yen rate, and cross currency basis markets?
Dollar yen's rise has stood out. Investors are optimistic about the Democrats and the Republicans reaching an agreement on raising the debt ceiling in the U.S., and fears about the U.S. government shutdown has receded. Moreover, the U.S. economic indicators have came in stronger than consensus market forecast, supporting expectations for the moderate hikes to come, as well as a stronger dollar. On the Japan side, the April trade data showed that the imports were down for the first time in 27 months, although the country was still a net importer, alleviate by a small margin. Over the near term, we expect positive sentiment to hold in the wake of the G7 summit in the G7 summit in Hiroshima, and see a bullish price for dollar yen with a trading in a range of 136.50 to 139.50. The yen swap rate curve has declined slightly, while the FX and the stock market options indicate that concerns about raising the debt ceiling in the U.S. have lessened. The popularity of the 1 month TDBs among the foreigners suggests more the concerns. Because of this, we expect the popularity of the TDBs to mean the smooth auctions. We expect the 10-year JGBI on May 23rd and the 40-year JGBs on May 25th auctions to be uneventful. We see a downward and falling bias for yen rates. The yen basis curve is widened slightly somewhat. The Ministry of Finance data shows that Japanese investors net bought 1 trillion yen of foreign securities in the week of May 7th to 13th. Specifically, they net bought 1.1 trillion yen of medium to long-term foreign bonds and 9 billion yen of overseas stocks and investment fund holdings. On the other hand, they unloaded a net 50 billion yen of short-term foreign bonds. Japanese investors have been rebuilding their foreign bond holdings since the end of the Golden Week. Also, over the same week, foreigners net bought 490 billion yen of Japanese securities, including 1 trillion yen of medium to long-term yen bonds, and 808 billion yen of Japan stocks and investment fund holdings. They also dumped a net 1.3 trillion yen of short-term yen bonds. Appetite for Japan stocks and JGBs has grown amongst foreigners, even after Golden Week, but Japanese also showed a strong appetite for foreign bonds with yen basis. We expect a return from a tightening bias to a neutral bias for yen basis.
Okay. All right. So bullish on dollar yen. It's obviously been it's performed very well recently. So you're looking for that to continue. Downward and flattening bias for JP rate. I suppose that has something to do with the fact that you don't expect any change in monetary policy until July at earliest. And then neutral bias for basis. As it appears it appears you seem to think it will continue to be a bit stuck in the mud. Does that sound about right, Sekido-san?
Yes, correct. Thanks.
Okay, great. All right, good stuff as always. Thanks for coming on the podcast.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.